Quite the interesting day today. I think we're at a very pivotal point in crypto with where Bitcoin's at. Potentially, this could be the high, but that sends us down towards 68K. And so I want to talk through that trade and also talk through how I managed to blow this account yesterday. So you see it's got $3 of equity left. It started the day off at about 57, and then went to 70, and then down to 3. And to be fair, on reflection, I realized that it was very reasonable for this to happen because I was trying to trade silver. The range on silver is massive at the moment. And essentially, if I want to put on any kind of trade, I'm risking huge amounts of money for this account size. So it essentially resulted in me putting on a $50 position on a $70 trading account. And not only that, I also took multiple attempts at the trade. So you can kind of see that it makes a lot of sense why this did not work. But essentially, I expected this would be quite a shallow run below these lows, which we got right here. We then got this nice failure swing, taking deep discount of the internal range. And I figured that we would be likely to rip straight back up. Really wanted to buy down here, but it didn't quite give me my entry, which was just below that. Rallies into the range, and then I managed to convince myself to get long in this area. And I caught a long through here. Here's what got me is the $70 equity, and then tried adding on the way back down. Now, I got a really important lesson from this. Yesterday, took my dog for the walk, went to the park, just sat down and did a voice memo, which is a really effective way to journal. Highly recommend it. But in that voice memo, I was talking through this trade, what my thoughts were, and I came to the realization that in this type of environment, in a squeeze theme environment where I'm expecting traders to be trapped offside, I'm going long against those positions. In that type of environment, I should only be buying on the right side of the V. What that means is, if you look at this downwards movement, that is the left side of the V. So in a squeeze environment, which obviously this didn't turn out to be that, but on the left side of the V in a squeeze environment, that is enticing traders, and then the right side is rapidly moving against them. And you'd expect that to be squeezing out those traders. So you can see a bit of an example down here. We have a left side that sells off, fails to take out the low, and then the right side is going back up. And you'll notice that it's very aggressive on the right side with little to no pullbacks. And that is fits the theme and the narrative of traders being trapped short and the markets running towards their stops. What I did wrong here, I'll turn on executions actually to help me explain my actual trades. But yeah, I'll walk through this and then I'll do a top down just to show where we are at, and then I'll jump straight over to the crypto. But yeah, so I wanted to buy in this area. Ended up buying here instead, but I decided to use a wider stop. And the stop that I put was actually down here. And the reason I put the stop down here is because there's a specific concept that I'm still developing. That is essentially a strong closure through the midpoint of a range. And I've measured out this midpoint, which is essentially from this high down to the low, the midpoint there. That's EQ. When we get above that level, if we are bullish, I want to see us get up there, hold above there for multiple candles. And once that has happened, I now expect that we will not return back to the impulse origin, essentially the starting point that sent us up to that high. That, in this particular instance, I identified as being down here. Now, I didn't quite like the structure because, I mean, we had just rallied and hadn't taken out any lows yet. So usually I'd like to see us consolidate down here a bit more. But I did kind of like the amount of time that we spent consolidating down here and a very large range above us. So if we were to rip back up, it could just head in one direction. So I had a bit of FOMO coming into this trade already. And I managed to convince myself to get long right there. So that worked out nicely to start with. I did want to get in with some more size, but it ran without me. And as I mentioned, this account was at $57. All of a sudden, I was up $15 right there. And on such an account size, I realized, well, it would be kind of illogical to let that come back down, especially when it started showing resistance in this area. So forget it, I take it out, which for the amount I was risking obviously isn't ideal. It's like less than 1-to-1, I think, from there to there. But for the account size, yeah, I was trading my equity basically, not the charts. But I did recognize that it was turning around correctly. As it turned back down, I started creating a narrative in my own mind, and I wasn't being objective, and that was kind of the problem here. My narrative was that okay, this area down here, we trapped traders below this resistance line. Well, that's not even what this is, but we trapped traders below this area short. So price shouldn't return down here. Within rally, we have this false high and a pullback in our downtrend. So I figured, well, maybe anyone who was getting short, they sold and now they're underwater. So I reckon the midpoint of this range will hold the price, which is why you see me buying right there as it drops into the midpoint of that range. Now, that was just me forming my own narrative. And the reason I was doing that is because I was being forced to be a sniper essentially and use very tight stops. So at this point, I was buying here and I had my stop loss at the low end of this. So I was trying to be an absolute sniper. Usually I try and avoid that type of trading, but if this is the right chart, if I show you what my risk would be, I have to say, yeah, buy stop, there we go. So if I was to put a buy stop right here and put my stop loss down here, all of a sudden I'm risking $35. So that's what I would have done, and I ended up doing actually. So I had, but when I re-entered here, I had my stop at these lows, and I was like, cool, risking $10, and I can buy two. So I risked $20 to this low, and that's why you can see me buying two. I get stopped out of one here, but the reason I only got stopped out of one is because I figured, well, originally I wanted to buy down below this short-term low, and our price was hitting these lows through here. And all of a sudden I'm in this situation where my stop loss is exactly where I wanted to get in. And that's not the ideal situation to be in, because let's say I was to buy here with a stop here, which is exactly what happened, got stopped out. I then got straight back in because it got this nice reaction right as a new hourly candle open from my point of interest after we hit sell side. So I figured, oh, so it is going up after all. This was actually where I wanted to buy anyway, so I better just jump straight back in. So I just paid the spread basically from there to there, which, that's $10 right there, just from that little movement. And on a $57 account, or what was 70, that's already taking a sizable chunk out. And then I got straight back out because I think I bought down here, but it reacted so fast that it filled me badly, so I got straight back out. So that was actually smart to get out there. But then as it pulls back down, I buy at my original point of interest, which was exactly below this low. Fills me nicely. But at this point, don't forget, I bought two up here, and I only got out of one. So I had moved my stop all the way down to my original point of interest. Stop invalidation. So $33 risk. As we drop down, I then add another one right here. So that was my entry. And if you look at that risk right there, that's all of a sudden I'm risking $50, just like that. Price sells off. It stops me out. Well, I closed one right there, so it came really close to my stop. It then starts running back up, and I figured, well, I better take off one just because it's clearly coming down here. That movement from there to where it ran up to, that is like almost $10. So I might as well take at least one off. It'd be rude not to. Took one off, and then gaps up right here, and I figure, or even before it gapped up, all of a sudden I thought, well, actually, it's looking really strong. It is a characteristic of the impulse origin that it comes to a super deep discount before it returns back up. So I jumped straight back in. Once again, selling and buying essentially the same level. But yeah, at this point, this was me going, okay, well, my equity is very, very much in jeopardy. Like, it was fluctuating between $50 equity and $0 between, just in the small range. And that explains to you why I blew this account. I was just oversized, risking $50 per trade on a $70 account, and at the same time I had gold trades running as well. So that really explains it, but you can just see what happened in the end. Turns out I was wrong about that initial trade idea anyway. But what could I have done differently? Now, I already mentioned that the main issue was that I was trying to put my stop loss exactly where I wanted to buy, partly due to just the fact that I was being forced to use a tight stop. And when I didn't use a tight stop, I blew my account. But how I could fix this and still be going for those sniper entries, but really fix this, is waiting for the right side of the V. I'm going to get rid of these executions so I can explain what I mean by that. But yeah, a squeeze theme. The idea is that once we are on the right side of the curve, there are traders who are trapped offside, and so price will relentlessly move against them. That makes it a lot easier to manage risk because I know that there should not be very major pullbacks against me, because that would be invalidating the narrative that forms the squeeze type environment. What that looks like, you can see in here on the 15-second chart. You'd be able to see exactly what that looks like. Don't know if I can bring that up real quick. But we have the left side of the curve selling downwards in this downtrend. And then the right side is when it starts moving back up. So by entering within this range, that is on the right side of the curve, and that starts sending us higher. And what that means is that I can then use invalidation a lot tighter, because I know that now that the momentum switched, we now have the narrative that traders are trapped offside. It should just relentlessly move up. Same thing over here. Instead of just buying randomly here and here on the way down, waiting for that turn and that aggressive movement showing that, okay, there's traders trapped offside, although that did not end up happening here, but I could have managed risk a lot better that way. Also, I would have been very patient waiting for this drop low, because I'd be getting excited the more it drops down in this downtrend, because the more it does that, the more it's enticing traders to sell. So I would be waiting, and rather than getting really nervous when it got down to the steep discount, I'd be getting excited to see that reversal so that I can try my long attempts. And let's say we get this nice rally, and let's say I bought there with a stop at the low. That's a lot higher probability than buying here with a stop down here. That's essentially what I'm getting at with that. So that was the lesson. Don't blow your account, basically. Although I did blow this, technically I am still green on the week because I flipped this account a few times earlier in the week. But yeah, risking $50 on a $70 account is guaranteed to blow it. Jumping straight over to crypto, going to show you what we're looking at and why I think we are at a turning point, and how I messed up the trade. Well, didn't really mess it up. I just wasn't at the chart when it actually happened, and had just been stopped out a bit earlier. But I might have walked through this already on this channel, but essentially this is looking bearish high time frame, and the reason being is that we've had this narrative recently, or for a while, that 100k, which is roughly here, so 100k, make that a nice solid looking line, green. 100k is a very major level on Bitcoin. Everyone's looking at it. The narrative has always been, as soon as we hit 100k earlier in the year, in 2024 actually, now, the narrative was that, oh, now it's hit 100k, it's never going to stop, it's going to go to the moon. Hit 100k today, probably next month will be 200k, and then like in 3 months it'll be 2 million. That stuff was floating all over Twitter, all over the internet, everyone was super bullish. Okay, it then fails, falls back below 100k, down to like 75, and then rips back up. So now it's back above 100k. Everyone's excited again, have these big, nice rallies, and yeah, everybody in the world knows about it. Everyone wants to get long. We then spend how much time? We spend a good 180 days above that high, so a good half a year consolidating up there, and we only reach up to 126k. So really not meeting the expectations of the average trader or anyone who is wanting to buy Bitcoin. We then break down aggressively below 100k. Now, what's significant about this is the narrative that everyone was buying up here. Everyone's now underwater. People in crypto tend to be bag holders. They do not take losses. And so that's what gives Bitcoin to have these major pullbacks. The next thing is that there is a very classic technical pattern, which is a 3 drive, which is when you have 1, 2, 3 drives into the highs and then an aggressive reversal. That is probably one of the most powerful reversal patterns you can get. Very, very simple. And when that aligns with a displacement like that, there's a very high probability to be a high. The fact that when we broke down through 100k, we did not retest 100k. And what I'd really like to see is us not even retest it. If we do not retest it and we break through these lows, that would indicate that we were not letting traders get back back out of their position at 100k or jump in a short, because there'll be plenty of traders who see this as a support/resistance line. They want to see us run into it, tap it, and then sell off or go back up. This low down here, so we had this aggressive sell-off and came really near this low. This is a really major obvious sell side pull. This is the most obvious sell side pull prior to us having this run and break above 100k. You also notice that if we grab out our liquidity midpoint, which is essentially the midpoint between these two pulls, we're actually on the weekly chart, you can see we're actually respecting that so far, which is interesting to see. But I do believe we should continue pushing down towards this low. And another thing that really stands out to me is the fact that this swing low was made at basically exactly 80k. So if you just drag that a few millimeters and it's at 80k. So we've made a low, a really obvious low with a long wick right at 80k. People see that as bullish, a bullish rejection. Everyone is looking to buy the dip. Everyone who had FOMO up here, they've now got this beautiful dip to buy. So it's the easiest buy the dip type setup possible, except buying the dip at the moment would be putting yourself in on the wrong with the wrong crowd. Essentially, the crowd at the moment, they're buying up here, they're buying down here. And if you want to win in trading, you don't want to be trading with the crowd. You want to be identifying where they're likely to be wrong. And I mean, it's pretty obvious at this point that we did not hit 2 million within a few months. We barely hit 126k and aggressively sold off. So it's clearly the expectation was completely incorrect. You do not want to be in alignment with that right now, and that's why I'm quite bearish on Bitcoin at the moment. Also, another thing to note is if we go to ETH BTC, this shows the relative strength between the two charts. And if we zoom out a whole bunch, you can see that very high time frame we are perfectly set up for an absolute blast through these highs. We have perfectly smooth highs. There's a very high time frame relative strength play that large institutions do between ETH and BTC. ETH is usually been the weaker pair, so have a little bit less strength, relative strength than Bitcoin, and institutions take advantage of that by going short ETH BTC. And that's why we have this nice downtrend like this. So institutions have been making money going short this the whole time. We've recently hit a major pool of sell side down here. had this reaction back up. We had the narrative of Bitcoin reversing. ETH, on the other hand, is looking quite strong. You will notice that our high up here was made exactly at 500s. So right at 500, we made a high and then sold off from that level back into this previous area of accumulation. So there's a lot of reason why ETH could actually have the strength rotate into that and then have a rip up. But what's cool about this chart is that it doesn't matter if crypto is bullish or bearish, this chart's still going to move in the direction of the relative strength of between these two pairs. So really keen to get long ETH, BTC. Ideally, I'd like to get long at around 0.03, sorry. However, yeah, we'll have to see because I'll likely be doing it with just spot, just make it nice and easy through Femex, but that should have a nice blast up, which is what I'm looking for. But jumping back over to Bitcoin, we'll also throw in XRP into the mix. What I like about XRP is the fact we have this super long wick. Now, you often hear me talk about long wicks. Traders tend to see long wicks as being bearish/bullish rejections. Now, sometimes this is the case, and there are ways of recognizing that. However, when it is following a really large rally like this, we have a very large wick like that, traders who need somewhere to trail their stops, they're going to see this as a great place to put it. If we were bullish, you would not want to see us dropping back into this range. You'd want to see us continue ripping higher, never get near that. But what happens is we run up, we take out a short-term high, and we start just rolling back over into the wick. So that's kind of showing bearish price action to me, which is also supportive of the idea of bearish crypto. I'm going to go to the daily chart now. One other thing I should have mentioned on Bitcoin, but don't really need any high time frame charts. So that should have stayed on there. So 100K is roughly here. Do all intervals. Below 100K, let's say we didn't hit 100K. What I find interesting is this short-term high. So that kind of stands out to me, although I don't require us to reach that. But if we were to get up to this level, I'd be watching that for sure. But actually at the moment, I'm thinking that we are flipping already. And I will now zoom into all the charts. You can see that ETH leaving nice smooth lows through here. Same with Bitcoin. We had recently kind of a three drive pattern here, but then a large consolidation below this level, and then ran up and just tapped that high. Now, when we tapped this high, you notice we made a higher high. At the same time, ETH made a lower high. So that's your SMT on the highs. We also had XRP running up into this range. What I really liked about XRP is the fact that we had a whole bunch of buy side above these highs, and the narrative of this long wick, traders that think that it's bullish. So while we're downtrending, there's going to be a lot of traders looking to buy. Then when we get an aggressive rally up like this, that is that enticing rip. Everyone who didn't buy already, they think, okay, sweet, it is definitely bullish now. Look at it, it's going to go to the moon. Everyone's going to want to buy right here. If we, after taking all this buy side, drop aggressively back down, that is confirming that this is a failure swing and we're likely to absolutely melt into these lows. What I like about this range is that we have you see a short-term high up here. Above that is a intermediate term high. It breaks down this range from this low to this high. That is buy side delivery, essentially an order block. And you'll notice that we respected that range, the midpoint of that range. We then also made a high up here that took out an impulse high, aggressively moved lower. And if we line up, this order block right here, it lines up perfectly with where we reached to as well. So this really does look like high to me. Also, interestingly, it lines up perfectly with, well, just a few little ticks below 420. But yeah, I would have liked to have sold up here. went with Bitcoin instead and took 2 attempts. And then on the second attempt, I just had a slightly early entry, then had to go to work. Don't need the ETH chart anymore, but yeah, so I'm going to focus mostly on Bitcoin right now. So it's taking out some buy side, very shallow, which is what I want to see. If I'm expecting traders are trapped on the wrong side of the market, I want to see very shallow runs above buy side and then aggressive moves in the other direction. Kind of what we're seeing here. And that's why, like, I don't demand it goes higher, but it very well could come up to these highs. But ideally, if this is the high, I reckon that would be even better, make it melt a lot more. But you see this nice green run up, very strong looking. Everyone who was trading down here, they're getting all excited, jumping out on the longs. And if we drop down to the next time frame, well, first of all, the fact that we don't take out this previous day high, that is indicative of a squeeze. That is very significant. But you'll see this next day following it, create a very long wick. Once again, traders see that as a bullish rejection. I'm going to go straight to the 4 hour. On the 4 hour time frame, we can now see that this run up is a very enticing rally, and we never really took out major lows, which means that there's going to be a lot of trailed stops to target. Go to the 1 hour now, just to dial it in even more. So you'll remember that BTC is the one that made the higher high. ETH made the lower high. Now there's a concept that I use within the idea of an SMT, which is a reverse SMT between closely correlated assets at major swing points, or when there's about to be a level of distribution, you will get reverse SMT. So whichever asset made the higher high, they're looking for a lower high, and you can see that happening right here. Whereas ETH makes a higher high, aggressively breaks down. What I liked about this is that anyone who is long through this range, where are their stops? Well, could be down here, sure. Most likely it's below this low and even deeper into the range. When we sold off, we fell short of that sell side. And in this area here, I was thinking, okay, this is actually looking very much like a short. I'm not super familiar with BTC and, well, trading it, that is. I figures that, like, I knew this was possible for it to run up like this, but at the same time, I figured, well, maybe it'll remain heavy. And I actually tried shorting in this area down here, which didn't work out. And you can see I'll drop to the low time and actually even show executions. But yeah, this gives you the context of where we're at. I'm going to jump over to this chart and show exactly what happened and what I was looking at. I'll start on the 15 maybe. I'll talk about that later. But this just set up nicely for a squeeze, because everyone who's buying, they're buying through this range, aggressively breaks down. As soon as we have this aggressive breakdown, what you want to see is us then entice back up, so that anyone who is long through this entire range, they see this pullback, they think, okay, that's the higher low. I'm going to move my stop loss to that low. That's essentially what happens. We have this aggressive run back up into the range, and we hit this high. Now, why is this high so significant? Well, if we look down from this range, we initially sell off aggressively from this high, so it's an impulse high. We then consolidate and engineer a really obvious pool of liquidity. This is what becomes a decoy buffer high, which I might have labeled on another chart, but a decoy buffer high or low is what I've called the swing point that is engineered as kind of like a decoy before the actual area of interest where price is going to go to. The purpose of that is, let's say someone is selling in this range, which I was, but let's say someone's going short and they're thinking, okay, I have my stop above that high. Some people do that, but most of the time people, they aren't sure where to put their stop, so they'll think, okay, I'll put it a little bit higher, but there's no swing highs in this range to put their stop loss at. When there is a large gap between a obvious buy side pull and another very obvious buy side pull, how I see it is I assume some traders might be doing something like that. And that's why when you get these aggressive rips up through a really obvious pull like this, where trailed stops would be, to a much, much deeper pull, this becomes an incredibly powerful liquidation point, because this is essentially the max pain point where traders who wanted to get out down here but held are now stopped out at an absolute max pain point, and that is where you get those beautiful reversals from. At the same time, anyone who was long through this range sees the pullback. They're like, great, I'm going to trade my stop to that low. And then we can see the same thing happening on a fractal nature in this range, where we have an aggressive rally. Anyone who is long, they're like, cool, I need somewhere to put my stop. Pulls back, rallies back up. Stops get trailed to this low, and then has this failure swing, aggressive breakdown. And failure swings are incredibly powerful because they are what, in a a squeeze type environment, are exactly what you'll see. Logic behind it is, let's say someone was lucky, they caught a long down here, and maybe they had their initial stop loss down here, and they're thinking, cool, I'm going to take profit when it makes a new high, because high low, high high. When price fails to make that high high and aggressively moves lower, that means that those traders are now trapped offside. It hasn't hit their first TP, and maybe they're one of those set and forget traders, or they just can't accept a loss and they hold. That's when price has these extended price runs. And once again, you can see that exact same concept that I mentioned over here, with this being the decoy buffer, this swing low, decoy buffer low. Below that, a good distance below that, is a very obvious sell side pull, the impulse low that started this run up. Price doesn't just stop here, it goes straight to that deeper liquidity pool. At this point, you have the same kind of narrative of people tracing the long. When price just consolidates, fails to get above the midpoint of the range, that is what's telling you that it is still bearish. If we were bullish at this point, you'd want to see price run aggressively through the midpoint, hold above it, the same that I was trying to explain earlier. But we just hit EQ and then just consolidate for a whole bunch of time. The more time we spend above this low, the more liquidity is building up down there. Anyone who's trying to buy the dip or protects their profits moves the stop there and aggressively sells off. You'll see that I extended this line out. The reason I do that is because when you have a very obvious decoy buffer high, so it is a very specific pool of liquidity, I probably need to develop the actual technical ways to define it, but essentially really obvious buy pull, a large gap, and then the next obvious buy pull. When we drop back below that, I want to see reaccumulation above that decoy buffer high. That's what you see here with these runs up. Now, I was actually short right from the highs. I then tried adding and got stopped out right there. I then went to work, and when I looked back at the chart, we were sitting down in this area, and I sent a message to my mate saying, yep, this is exactly what I want to see. This is absolutely perfect. That failure swing, aggressive breakback down, we should remain heavy through this range. So really cool to see it play out, but I'll show my executions anyway, just so I can show how I did. But yeah, as I mentioned, I was getting short through here, and this is kind of a very premature trade without any context, really. I'd only just opened up Bitcoin, saw we'd sold off, and thought, you know what? Maybe we could have trapped traders here and we just won't go up there at all. So I'll turn on executions and you'll see that. So yeah, basically blindly shorting and then eventually getting stopped out. And then as it pulled back, I held on to this bit just in case it had a slight pullback, and then got out right there. As soon as I got out, I also wrote this out, which is quite funny, so I left it there. Am I just selling a squeeze? So I realized that, okay, this is kind of a dumb trade. It clearly wants this buy side. It's probably going up here, and here I am going short. And as soon as I took that screenshot of, okay, I stopped out now, just close the position, I walk away, come back to the chart, and all of a sudden price is like ripping. So I was like, my intuition was on point for that. But besides that, you can see that I took a few little losses there, nothing too major, but we ran up to this impulse high. Now, because we have the SMT on the highs, this is also a balanced range up here. I figured that this was very unlikely for us to take out this swing high, and we just hit this impulse high. So I got short right after we got that reaction from the highs. And it was kind of a slightly impulsive trade, but it made a lot of logical sense. But I figured, okay, jump in short, put my stop above this high, and then it just starts going sideways. So I stayed in one of my position sizes, but I took a partial on one as well after it reacted from that volume imbalance. This is a common theme in my trading. I take a partial, regret it, jump straight back in. So it's something I need to work on for sure. But yeah, got back in there. You can see that I got stopped out. Well, I didn't, yeah. Well, I got stopped out at the edge right there because I didn't like what price action was doing. It had taken out this deep discount and turner range and started squeezing high. Now on the 15-second time frame, I will actually go to this because this is a pretty cool little feature of a squeeze. Now this is just a fractal squeeze on the 15-second time frame, but it still is a squeeze. And you'll see I've even got my drawing still there. But you'll notice that we have an obvious high made. We're then pulling back and we take out this deep discount and turner range low. After doing that, we then begin crawling higher very, very steadily and just without much of a pullback, failing to take out lows. So barely taking out the lows, getting reactions back up. What that is indicating the same squeeze characteristics you'd see in the high time frame, which means that price is likely moving against anyone on his short and is going to aggressively run up to some obvious buy side pull, such as this buy side pull up here. I recognize that squeeze grind high, and that's why I closed out that position right there, which saved me from ripping up to where my stop would have likely been. Still had one on at this point that I got short up here. And then as soon as we hit that high, we get this beautiful breakdown after taking out the swing high. I really liked that, so I jumped in short again. It takes out that low, spends some time down there, it starts pulling back into the range. Now at this point, what I'm looking at is if we are bearish, I want to see this area up here, the time that we spent up here, an entire minute. I want to see that as an area of trap traders. I'm now measuring from this swing high up to the next swing high on the 15-second time frame. When I identify that midpoint, I want to see us remain below the midpoint. We initially headed up there. I waited. I didn't sell straight away. I waited to see if we were going to get above the midpoint. After spending multiple candles, just failing to get through this range, jumped in short, and at this one I was short 3. We sold off. I took one off down at these. There's like a 15-second low down here. Held through this, and then once we got this price action here, I actually kind of like this. One aggressive breakdown, and there's not a single place for trailed stops. So I know very well that anyone who is looking to buy, they're going to be waiting for a low to be created and then us to start enticing longs. So when this happened, I was like, cool, I want to see us break back down. We had a very small bull flag type formation, bull flag breakout, everyone buys, breaks down aggressively. That was a beautiful area, and I really trust the short at this point, and so I trailed my stop. Very, just down to this area here. We then sell off more, take a partial just before hitting this lower fair value gap, because a lot of the time we will balance a range before running it out, which is exactly what happens. Balance the range, we start running back up. Now I was figuring that, okay, well, I reckon we stay below this kind of area. So I sold right there and get my stop there, stop me out, which is perfectly fine. I managed the trade correctly for what it was. We then pull up. I went off to, sorry, I didn't go to work at this point. I think I finished blowing my other account at this point. So this was actually on my swing trading account. which still has a bunch of positions open at the moment, but mostly on stocks. And yeah, I was trading Bitcoin on that. I then jumped over to my other account, blew it on silver, went to work, and then looked at the price when it was down here. And what I love is how we ran back up. We tapped that exact same impulse high from the 15-minute time frame, and then got that aggressive breakdown. And the very fact that we failed to take out this high and made equal highs, that is telling you that we are squeezing out the longs, and that is why you can trust that this will remain incredibly heavy. And there was a really clean example of something very similar to this on gold quite recently. I think maybe started last week. Believe I put it in a video somewhere, but essentially we had an aggressive rally, a pullback, an obvious low created, and then a failure swing, aggressive breakdown, and that results in that nice sell-off. A bit tricky in here because you see, you look at this and you think, oh, well, we could easily run up to any of these highs. But I think really what would give you the permission to go short in this area is waiting for, once again, the right side of the V. If I was to short in this area, had I not been at work, I wouldn't want to be getting short, let's say here or here or here. That's not what you want to do. You want to wait for price to turn, to then show an unwillingness to go higher and then break down. I'm not going to go through where I think that is right now, but ideally just above this line, trusting that this high wouldn't get taken out. So let's say you literally just shorted like that. But at least you have a clearly defined area where the squeeze narrative is no longer valid. Yeah, that sells off. Now, at this point, what could Bitcoin do? Well, I do like this high. I think this could very well be it, partly because of the fact we had this run up like this. And I'm just trying to read the narrative of who is trapped offside at the moment. To me, the very fact that the previous day high was not taken out on Bitcoin, so we failed to take out the previous day high. We also had a very long wick, and then we melted the very next day after creating a failure swing. I really like that narrative. This is, however, a manipulation closure, which sends us further away, but it can also indicate a likelihood of coming back up. So maybe this is a market maker model to head back up. And like I mentioned, I'm not super familiar with Bitcoin and how it moves. And you can see that with my lovely executions selling at the lows down here. But at the same time, I was aware that I didn't know how it moved that well. So when it did have this rip up and hit this high, that looked very normal and very healthy to me, which is why I trusted taking the short. So yeah, at this point, I'd like to see it remain heavy essentially. The invalidation for shorts would be if we were to grab out this range. So, and you could use the whole range, but really you'd be wanting to use from the opening price down here. Well, that's the opening price up to the high. The midpoint of that is the order block mean threshold. And that would kind of be the invalidation for shorts. So let's say we were to run back up into the range, could potentially, like maybe you could get short right here with a stop sitting up here. I don't know, maybe, might try it. But at the same time, it might just remain heavy and continue melting. Or on the other hand, it might end up coming to this area after all. But basically, as long as we fail to reach 100K and show aggressive willingness to move lower, I think it's worth taking stabs at the short side. Silver at the close today took a nice, this was actually a really easy trade, so I'll walk through this really quick. You'll see that got long. This is on a challenge account, 5K challenge, massive spread. Luckily, Black Bull Markets has really good spread on silver. And I'll jump over to silver right now. Don't need that on right now. Where are we? Oh yeah, silver. Make sure that's the right accounts. So I don't need it on anyway, but I was trading this account anyway. No, it wasn't. I was trading the other account. This is the account of blue. But on silver today, this is the PM session. What I was looking at, if we go to the 1 hour time frame, first of all, real quick, obviously a squeeze environment, barely taking out the lows, moving higher, aggressively drawing up towards the trap shorts up here. We then get above the midpoint between this high and this high. That midpoint with a multiple candle closures above that midpoint indicates that we are in fact going to hit this high, the all-time high, which fits that narrative of squeezing out any bears. We then pull back into the range. Now, I initially figured that we could potentially react from this area here. That could be a great buying area, which turns out it wasn't. But which is why I bought up there. But then when we sold off, I started recognizing the market maker model framework and how that could play out. Now, this previous day low is marked out. It is a point of interest. However, if we do not take it out, it would actually be very logical because once again, with a squeeze type environment, there will be traders looking to sell. Let's say there are traders going short here, and they want to take profits down at the previous day low. So if we don't hit it and start squeezing higher, that's even better. However, there is liquidity down here, so yeah. But what I saw here that gave me confidence with the long was simply the fact that I saw a market maker model framework that had just played out. So yeah, smart reversal up here, or original consolidation actually, I should say, which is, if we go to the 5 minutes, you'll see it quite clearly. On the 5 minutes, we have a very nice multiple hourly opening prices at the exact same price. That indicates a consolidation, original consolidation. Aggressive sells off, a short-term high, a intermediate-term high, breaks the low. So this is first stage. So this right here, intermediate-term high, breaks that low. As soon as we break the low right here, that becomes first stage, has now successfully played out. And once first stage is played out, we're looking for second stage, which is usually a partial entry into a gap, which we get right here. Partial entry, sells off. So that's second stage. As soon as we break ERL, break this low, second stage has now played out. Now on a market maker model, you have the original consolidation, you have first stage, second stage, and then you have the smart money reversal. A reversal, I've mentioned before that it is often, going to be a, it can happen in a 3-drive pattern, and you get exactly that here. Or in fact, you kind of get 4 drives, but you get the idea. We have, if we just count the 3, we have 1, 2, 3 drives, and then we reverse back up. So very likely a reversal point. It fits in with the narrative of us not taking this low, and it fits in with the structure of the market maker model framework. We are super bullish as well. So I wanted to see, does this actually support the idea of being a low? You notice that we have this nice fair value gap through here. We're really, really deep up through that range, failed to hit this really obvious buy side pull, and then sell back off aggressively. Now, the only thing is that there is a really obvious impulse low down here. Kind of want to see that gets hit, but at the same time, we're showing that bullishness, and it's in a very bullish environment. We open up this 1300 candle, spend the majority of the time at a discount below it. We then rally up, break down. That's where I got long, and I'll show this area on the 1 minute time frame right now just to show exactly what I saw. So there's the 3 drive, that pullback, and yeah, this is just me talking about my executions, which that ended up being a long that didn't work, but that's all good. I got out of break even. So after having this rally, we have a bull flag type formation. So bull flag essentially when you have a rally and then some sideways price action, and then when you then break out of that range, that's a classic retail pattern of a bull flag. There'll be traders wanting to buy up here and put their stops below the bull flag low. So when it fails, we drop aggressively below the bull flag low. We've now got time trapping traders short and accumulating all of this sell side. When we get that, and then we have this aggressive run from that area, that aggressiveness is showing you that we've now trapped traders offside, and we are in an area that we were accumulating. We then get really close to this buy side pool, and you'll see over here displacement / intent of reaching buy side. That displacement, that shows that it's actually willing to hit this buy side pool, pulls back, and I bought right here. The reason I bought is because I trusted that we had just trapped traders at these lows. Their stop loss wasn't in this range. Their stop loss was above this high and above this impulse high. So I trusted that I could buy there. I could put my stop loss down in this area because if price were to return down there, it invalidates the entire narrative of there being trapped traders. So that's why I trusted that. Had this beautiful run up into the range. Took partial at that impulse high. It ends up just breaking down from there. And at this point, I'm kind of 50-50 because gold does look like it could come lower. Silver could easily drop back down towards these lows as well. But I am leaning more on the bullish side, and we'll find out in 10 minutes what happens. But going to be watching the chart, seeing if maybe we were just buying down here, trusting that this intermediate term low will not get taken out, which is a likelihood. But once again, if I just show the kind of range that we're working with, if I was to buy on this account, just with the smallest position size, if I was to mark it in, that's already risking $20. And on a small account, that is, a fair bit. So really need to be a sniper, but if I continue waiting for the right side of the V, that's how I'm going to get those good entries. And you'll notice that before I had some notes written out here saying right side of the V. And what that was is I took a long over here somewhere, but I actually waited for that right side of the V, and it worked out quite good. Like, sure, I was incorrect overall, but by waiting for the right side of the V, I waited for us to fail to take out ERL, but break through these lows, move back up, break this intermediate term high, and then that confirmed, okay, it's showing bullishness. We're clearly squeezing towards these highs at this point. We haven't hit this high yet. So I could buy on the right side of the V using quite a tight stop, knowing that any deep retracement against me is invalidating the idea of a squeeze anyway, which happens right here. But at this point, I was able to move my stop to break even because if price were to return back into this wick after having failed to already do so, that would indicate that we're reversing. And yeah, so that one works quite well. I think that'll do for this video. I covered quite a few things. Most importantly, it's just the whole Bitcoin narrative. I think it's really interesting to watch that at the moment. And I'll be watching to see what happens when price gets up to, if price gets up back above 92.2k. XRP would have liked to have been short from the highs. With the minimum size, once again, if I was to short down here using the high time frame invalidation, it's risking like half my account. So I have to be a sniper, and if I'm going to trade something at the moment, I'm more likely to go for Bitcoin because I've got that that's high time frame narrative of traders wanting to buy above 100k to lean on. So that'll do for this video, essentially. Very much not worried about the fact I blew this account because one, I already made money on it, but two, I was taking $50 risk trades with a $70 account. So like the best trader in the world would have also blown their account if they did trade like that. So in future, just don't trade like that. So yeah, hopefully you found this an interesting video. It definitely helps me a lot to talk through all that stuff, and yeah, good trading the rest of the week.